Okay.
All right, folks, we're live here, and I've got Mary Ellen. I've followed Mary Ellen for quite some time. She has been around the block probably twice, and compared to the rest of us, she's been to Goldman Sachs, Equitable Life, William O'Neill. I mean, and now it's Simpler Trade. Ellen, you've done just about everything from high-level finance all the way down to trading. I mean, how did you get started in this whole arena that we are all so accustomed to?
Yeah, I would tell you it was a little bit kind of like a mistake. I was not even aware that there was a Wall Street when I was growing up in the mean streets of Philly. But after college, I was in Manhattan, and I was still uncertain about my future. So I joined a temporary agency to get into these different corporations. My first job was with Goldman Sachs, and I was taking the place of a gal who was out. She'd had a serious back operation. So I was there for quite some time. I was an assistant on the trading floor for fixed income, and man, it was before cell phones. I mean, everything. It was just shouting and screaming and hundreds of millions of dollars trading, and I found my place. So that's how I started out. And then from there, I went to another firm, an asset management firm. They hired me, and I worked my way up from an assistant portfolio manager to eventually running a trading desk and managing $2 billion in assets.
Wow.
So it was.
How old were you?
Pardon?
How old were you at that opportunity?
I made VP my mid-20s.
Wow.
And I was doing, it was crazy. It was so exciting. Yes, I was doing quarterly board meetings.
Oh my gosh. And your friends are still bartending or something, probably somewhere, right?
That's right. No, I'm in Manhattan.
Running the show at Goldman Sachs and Equitable Life. Actually, Equitable Life at that time, right?
Yeah, absolutely. Yeah. No, there were a lot of go-getters in Manhattan. That was the joy of living in the city.
Did you have like a certain industry that you'd cover, like biotech, or were you just pretty much across the board looking for value?
Yeah, a generalist. So when I was running money, it was all about fixed income. So it was treasuries and bond buying, muni bonds, and very much focused on creditworthiness. So, but a generalist. And then wasn't until I moved to the West Coast and joined William O'Neill and Company that I really got immersed in the wonderful world of stocks.
The equities, yes.
Yeah.
We've had that same journey together, as a matter of fact. Like back in the day, I was the Fed funds, 30-day Fed funds. So you and I were keeping an eye on Greenspan and
oh my gosh, do you remember? And Volcker, and they would announce the money supply.
Yeah, totally.
So I can recall being at Goldman for several of those, and these big heavyweight traders, they would bet on what the money supply, they would bet on anything, but the money supply would just get huge. Like everybody would stand on their chairs and scream, and then they would announce the money supply, and then
everyone would, hit the guy that won, right? So that's funny. We would kind of do something very similar in nature at the pits as well, like trying to bet on the entire whatever it was. We used to say,
the economic report was, right?
Traders, what's that?
Whatever the economic report of the day was.
Yes. Oh, yeah, that too. Over under on it and stuff. But the what was I going to say? The I don't know. It'll come to me when I'm thinking.
Sure.
But
I shouldn't have interrupted you.
No, it's all right. I wanted to hear what you had to say anyway. It was along those lines, but I don't know.
Yeah, and then of course around the tennis. Well, as a money manager, I was wined and dined almost to the point of excess. So if a play came out, we would go see the first run, and so the big thing was tennis, the U.S. Open, and these different houses would get these big exotic tents, and you would go to the U.S. Open, and we would joke that they should put the money supply up on the scoreboard because there was on Wall Street, was from Wall Street. on any given day.
That's what I was going to say, is that traders will trade two raindrops against each other. And it's the opportunity, right? I mean, it doesn't matter what it is. If it's you and me and there's a raindrop, we're going to be like, okay, what size is it? Or how fast is it going to hit before it hits the ground? Come up with something, right?
Well, we would have annual business trips as well, and they would take place either out in the Hamptons or a different location, but inevitably, so it would be all the money managers, and they would always have a casino night, the gambling, and that was always just the most electric.
Right. That's when everybody was really themselves and letting their hair down, in a sense, right? Mm-hmm. So what got you turned around and doing the educational aspect of finance?
Yeah, so while at William O'Neill and Company, and Bill O'Neill, of course, is the founder of Investors Business Daily. So my role there was in the institutional division I really had clients around the world. And so it was a twofold. It was marketing, but the initial marketing piece was indoctrinating these portfolio managers into the O'Neill methodology. So there was a definite educational piece there. So here's what this is all about. Here's the value add. And then, so I found that to be really, really interesting and just a great part of the puzzle. And at that time, technical analysis was still not being what I felt some people I thought, well, should we meet in the closet?
Right. Yeah. Oh, you're talking witchcraft.
Yeah, that's right. Tea leaves.
Yeah.
But it certainly got better as time went on. But there was a definite educational piece to that. And so I was for 15 years there. And then at the end of my tenure, most of the people of my institutional marketing, there were about 15 of us. And we were all based in LA. But what they started to do was open up offices in London. They opened an office in New York, Boston, and they kind of dissipated the LA office. So at that time, I had a couple of years to kind of think, well, gee, what is my next step here? And I was employed by two separate occasions. My former clients had me work for them as far as being director of marketing and so forth. But over time, I realized the need and the desire to help self-directed, to help individual investors. And it's really been, I have to say, one of the most rewarding parts of my career as far as the feedback. I get emails very regularly, people just thanking me. I have that high level knowledge as far as the institutional markets, but I've been told I have a very good way of making it mainstream and kind of breaking it down so that it's very, very educational, but easy to digest. So
in the small bites. Yeah. I kind of look at it as I try to take it from like simple concepts to real life examples and build from things like that you would understand in a normal circumstance. You know, we were kind of going back and forth talking about options. And one of those things that I like to do is compare it to a house. You know, if you're buying a call option on a house that is $300,000, maybe you can't buy that house right now, but you bought a call option to buy that house for $325,000. Now, right now, you have the right but not the opportunity to buy that house. But with the house being worth less than the price on the call, you're probably not going to do it. But in this kind of environment with the housing, right? If that in a month or two, that house is now worth $350, are you going to go through your right to buy the house at $325? Well, then that makes a little bit more sense, and then kind of build from that way. And in a sense, I see that's what you do as well, building from those simple concepts. Now, with all of that, I know with technical analysis, some folks will claim I got analysis paralysis because they're looking at too many things. You can look at some of these charts sometimes, right? And they've got Bollinger Bands and Ichimuchi, or I don't even know how to say that, right? But, you know, all different kinds of indicators. And it's like, have you been able to narrow that down to a few simple ideas in that sense where you found give better indicators rather than some of the other ones?
Yeah, that's a great question. I absolutely have totally simplified it. I've broken it down to 2 indicators, and then moving averages are a big part of my work. And so I think that's one of the other that's one of the more attractive features of my work, is that it is very, very simplified. And then what I do on top of that is overlay, I'm calling it the O'Neill methodology. For Investors Business Daily readers, you'll know it as Can Slim. So it's a proven methodology that includes fundamental information, and then also industry group. So it's so very simplified, again, 2 indicators, but overlaying this proven system on top of that. So it's
the strategy is around your system is what you're, is that, am I saying that right?
Absolutely. Yeah. So it's going to be, are you in the right sector or industry group, as of, for instance, because that Bill talks about this in his book, that stocks, either appreciation or depreciation, almost 50% of price movement is attributable to the group and the sector that stock is a part of. So a lot of people don't realize that, but that it's so important to get that piece right. Mm-hmm. And from there, you then overlay, and for me, I'm looking for fast growers. I want to see strong earnings, strong sales. And then, of course, that beautiful chart.
Yes, exactly. Look for the beautiful chart setup. Exactly. Do you have anything like what you mentioned there? Is there anything that jumps out at you that is like, okay, this has got my attention? Like as soon as you see it, for me, I'm looking for certain candlesticks in a sense at the top and bottom of patterns. Do you look for anything like that with your technical analysis that, all of a sudden the light bulb goes up and you're like, okay, this is one of those moments where I can't pass this chart up because I gotta.
Yeah, that's a great question. And actually, so I do have a newsletter there. I have about 700 subscribers. It's a biweekly report. And I don't say this often, but I do know it. So every day I'm going through charts, and I've been doing it for so many darn years. And I know I'm sure you have these moments where you look, your heart just skips. You're like, oh my God, that's a thing of beauty.
Right, it is. And then you're like, why didn't I see this yesterday? Like I was flipping it, so now you're all of a sudden, aha, come on, right?
Yeah. So I did a presentation recently where I talked about that concept, that 10,000 hours, how it, I'm sure you're familiar with that. And yeah, I've put in way more than 10,000 hours. When I would fly over to Europe, they'd be 10-hour flights, and even to the East Coast, it would be 5 full hours of just going through charts. But every weekend, Bill O'Neill, not him, but what he would do is deliver a very big box filled with chart books. And the big O'Neill, they're called database books, were this big and this thick. And there was a part 1 and a part 2. So I would go through that, plus about 6 other smaller chart books every weekend, just getting ready for the next week. And then, or if I was visiting with clients, so the clients would give me their portfolios plus their watch list, so that when we met, I could highlight what looked attractive and what didn't. But the point is, you do something like that for a lot of years, it's going to stick as far as knowing when a beautiful chart crosses your desk.
Right.
Yeah.
Now, in that, I love that, because I always try and talk to folks like, it's not always the best idea to trade the leading indicator or the leading index, right? Rather, watch some of those roll over and then look for those setups starting to happen in some other in that same sector or index, right? So, you made a great point on this, where I've been talking about it in spot the trades, Penn just came out with earnings and some bad news about Portnoy and all that stuff, and it brought Penn down on their earnings, whereas Las Vegas Sands had done relatively well on their earnings, but they totally got drugged down during that whole Penn thing. So,
right.
You know, they had already started their rebound, and then this Penn news that came out, and for some reason they started correcting part of that during that time. Well, not quite as bad, but you could definitely feel the weight of that sector anyway.
Absolutely. Yeah, that is super one of the biggest components of my work is sector rotation, getting in front of those groups, and then looking at the underlying sub industry groupings. So for instance, with Bill O'Neill's work, he has broken the market down to 197 industry groups. So if someone says, gosh, retail is just really, and it has consumer discretionary, but retail has really picked up. Well, there are 18 sub industry groupings. So I can go in and say, well, yeah, but it's really doing well. The shoe, look at Crocs. I've had Boot Barn on my list, on my suggested holdings list for my newsletter.
Okay.
For probably 2-3 months now. So to be able to get that refined is going to help make the difference as well.
Right. Yeah, totally. I mean, why trade the leader where you don't know where it's necessarily going to go? I mean, especially like crude oil or something like that. I mean, if you want to make $1 million in crude oil, start with 2, right?
That's funny.
You have got to love to lose money in crude oil if you're trading that. And, in that, why trade a leader and not go to some of the other ones where you're going maybe to ConocoPhillips or some of the stocks that are associated to it?
Oh, I see. So you're saying that don't trade the commodity, trade the underlying company?
More so, especially in gold and crude oil. I stay away from those, but I also say that I'm a recovering futures trader. So, that back in the day, you'd put on a lot more trades, taking them on and off, and then going to the screen. It's really not conducive. You have a tendency to point and click a little too much in that. At least I do.
Sure. No, you have to know your strengths and weaknesses. I mean, that's another key component to being successful. If there's an area, and so, for instance, with my work, I was dipping back into REIT stocks because they are renowned as an inflationary hedge because they already built into their leases with their tenants these inflation clauses, so they can raise rent. And then, of course, the underlying real estate, if inflation rises, that rises. So there's valid reasons to get into REIT stocks. But I thought, it's not my wheelhouse.
Right.
I know growth, and I know tech, and I know retail. I mean, so knowing your strengths, just pointing that out as being.
And that's a great point. And, trade what you know. Not all traders have to go out there and trade 2 raindrops against each other, right? I mean, that's not necessarily what we're trying to talk about here, folks, but trade what you know. Like if you are into shoes or something like that, then that's maybe part of the retail sector that you're really focused on. I wouldn't say that's where you're putting all your eggs in one basket. Try to keep, diversified by looking elsewhere, but maybe that is your main focus in a watch list or something like that where you can keep an eye on it, right?
So I worked with Fidelity. I was right after oh my gosh, of course, I'm not going to remember his Peter Lynch. But I did, when my kids were younger, I taught a stock investing course at their grade school. And it was Morgan Stanley sponsored it. There were 1,000 people that competed. And then you taught this course, and it had a lot of Peter Lynch isms in it. So I basically said to the class, I said, hey, really, if you go to the mall and take a look at those stores that are really crowded, it doesn't have to be that difficult. So we actually, out of 1,000, we came in second
Wow.
It happened to be a period when retail was doing really well. So it was Abercrombie, I think, Coach at the time. But it was that concept that of trading what you know, and that's what Peter Lynch always says. His wife brought him one of his top picks, and it was Pier 1 when they were. This is many years ago, and she came home all excited. Oh my gosh, and Bill O'Neill, the same thing. He years ago got into, it was called Price Club at the time. It's Costco now, and he was going to San Diego on a business trip, and he looked over and he said, "What? That parking lot is packed. It looked just like this big building. What is it?" And it was Price Club. And so then he got back and he did some research and made a lot of money.
Oh yeah, really. I imagine what that's, trading what you know and things, or what you find. What strikes you kind of. If you're into fashion, stuff like that, maybe you're probably closer to retail or something. But one of those stories similar to me is I was just, when they first came out with yogurt drinks, Yoplait had those little yogurt drinks or whatever. I thought, that's the most brilliant thing ever, is like you cut the size in half, because they basically were going from like a little 12-ounce cup or whatever to 8-ounce drink. You take the yogurt, you thin it out with water, and then you give it half of a serving and sell it for twice as much. I mean, that works for me.
That's brilliant.
It is one of the most brilliant things I've ever seen anybody ever do.
That's funny. So hopefully, I'm trying to think, are they an American listed company?
Yoplait, I think it was from Dannon.
Okay, yeah.
Dannon at the time or whatever.
Sure.
It was, I can't remember exactly, but I think it was Dannon.
Yeah, and then other examples with Bill O'Neill and certainly with a lot of successful investors. There was a period where his wife was ill and had to have surgery. So, of course, the Da Vinci, are you familiar with it's the automated surgical device, that intuitive surgical, ISRG. So I'm going back a lot of years, but it can be that simple where you say, well, gosh, at the time it was very new technology and it was very successful. And so you can take that kind of experience and say, well, this is cutting edge. And maybe the doctor gives insight that it's becoming more popular. And that was another big trade.
Oh, that's cool.
Yeah.
I mean, it is about your experiences and where you are, what you see. I mean, that really will ultimately impact you going forward. Have you ever had a worst case scenario horror story or anything else like that, where you were just kind of like a fat finger error, or that you've learned from in that way?
Oh yeah, of course. So when I first left O'Neill, I had it all figured out. I was going to manage my own money and just live the life of chocolates and
bonbons or whatever.
Lattes, I don't know. And this is actually, now that I'm speaking of it, is probably one of the main reasons I did want to get into the educational realm. So I had put on I would get up early, the whole package, and I was doing really well, except I didn't even realize this. I did not have an exit strategy. I knew how to get into these stocks, and that was my role with these money managers, to alert them. They would give me their watch list. I'd say, hey, it's breaking out. This looks great. But I didn't follow up and say, oh, it's time to exit. And so I didn't even occur to me. I did not have an exit plan. And I can still remember it was Fossil. This is going back 10 plus years ago. And I watched that darn stuff. I'm like, what the heck? So I closed up shop and went back to the table and got a system in place. And I thought, now listen, I can't be the only one that's, leaving. It really reeks with your confidence as much as anything. And that's such a critical component when you're investing your own money, because there are so many unknowns. You need to have that strict, solid system and then the confidence to get in and out. So,
yes. And stay mechanical, right? That's basically what you're saying, is kind of go
Absolutely.
through a process. It's step by step. And
Yeah.
if you guys don't take anything away from this entire conversation, knowing your exit strategy before even entering the trade is probably something these folks should really take home, right? Is
Absolutely.
before you put that trade on. Yeah.
It's something I talk about every time now. Whenever I do any kind of webinar, I always include, whether it's talking about how to use volume, moving out, I always have one bullet and I say, and we're going to talk about exit strategies.
Yeah.
It's really the difference. And so study after study, this is something that I've uncovered now over the last 10 plus years. When you're trading, you only need to be correct 40% of the time, and you will far outpace the market. The differentiator is having that exit plan. That's the difference. So, whether it's stop loss or using moving averages and volume, but knowing when to get out.
And don't second guess yourself on that, right? Like, because we can talk ourselves out of anything or into anything. And the idea is, don't do that. You've already done your research. You've got the data. Get in and get out when you said you're going to. And ultimately, don't look back at it. Don't go back and say, did I do the right thing? Absolutely. Move on. Wait for the process to come. If you thought you got out too early or want to get back in, I always suggest, and as an options trader, sell some puts at a level you're comfortable buying it. If you've gotten out of something, or when we've done a covered call strategy that's gotten called away, then if you really love that stock, go back in there and start looking at selling some puts. If it doesn't come to you, you get an extra dividend from the company that you don't own anymore.
Yeah. No, that's a good idea. And I agree totally that is another key component, is to move on. There's going to be another name. There'll be another stock. If you left a few bucks on the table, you left with your confidence intact. So.
Yeah, totally. And to take that emotion out of it is key. And you've mentioned that several times, is when you have a process from beginning to end, that means getting out of that trade, that you are going to take that emotion out of it. I always try to talk about that as well. And that was one of my aha moments on the floor one time. A friend of ours, he was the whale of the floor, or in our pit anyway. He traded the largest notional amount of contracts on the floor. So, there's a Baldwin in the pit, and he has always been considered the largest trader on the floor. But this guy, Lundergan, notional value, trading 1,000 lots with a $5 million face value. He was crushing Baldwin in that regard. But, I always looked up to him. And when I first started trading, he walked up to me. He was like, hey, how's it going today? I was like, I'm up $500 and, working on this other thing, and I'm going to try and make another $500. And he was like, dude, stop. You're going about this all wrong. If you're not thinking about it as ticks and or probabilities on your spreads and stuff like that, all of that money talk that you're doing is going to make you lose money. He was like, as soon as you can stop thinking or correlating your winnings to money or loss of money, he was like, and you think about it, or the probabilities are this, or I can only lose 2 ticks this way and make 5 ticks that way, and started talking to me about that. Worry about your risk reward and all of that, more so than the money. He was like, the money is going to drive you crazy. And that was like one of those moments where I was like, you know what? It's about levels. It's about getting in at good levels, strike location, all of that, and then worrying about your exit. I don't worry about how much money I made on that. It's all about, structure of how much I'm willing to risk on this trade, or the, portfolio percentage of portfolio size onto this trade, and go about it that way, and never think about it as it's a dollar amount. So for me, that was something that kind of got me to turn that corner a little.
Yeah, it did take me a bit to get those emotions out of the way, but so for anyone that is struggling with that, it can take time, because this is your hard-earned money. retirement or otherwise, but stay with it, because once you are able to really embrace your system and just consistently perform, it has a way of fading away, and believe it or not. So, and you talked about mechanical. So if you can get there, you're really going to be in the top 1% or 10% maybe
Right.
of traders. Yeah.
I agree. And I'll throw it out to you folks out there if you guys want to. I know Mary Ellen's got to get going very shortly, but if anybody has one question out there, maybe you want to throw out there, you can throw it in the chat window. I'll give you a couple of seconds, so you better start typing quick before we get going, because I know she's got a newsletter she wants to get out to her folks. And in the meantime, Mary Ellen, I threw in your Simpler Trading website with your link to your bio. Is there anything that you wanted to throw in there that
Sure.
share with these folks?
That's a great question. I do have a trial for that biweekly newsletter, and you can trial that for $7 for 4 weeks. And you would go to meminvestmentresearch.com, and there's a link right there. It'll just take you right to it. You'll also get instant access to all of the current reports. So for instance, today's Tuesday. So I normally do a very, not lengthy, it's very involved, it's detailed Sunday report. And then I do a Wednesday midweek report just to update any stocks or the markets. But then I'll do alerts like today. Today's Tuesday. So I'm going to do an alert report because there's been enough shift in the market action. And I do have 2 stocks from my watch list that are now going to be put on the buy list. So yeah, 4 weeks.
One more time with that, because I'm going to try and type it in here as you go. I think it was.
Oh, yeah, perfect. MEM investmentresearch.com. And you can also read more about my work as well.
All right. So MEM investmentresearch.com. I believe I spelled that right. All right. I'm putting that in there for you. So yeah, guys, click on that link over to the side, and I'm not seeing any questions. Some people are shy right now, or they're going to be popping in here late. We'll have to see. But we will circle around, make sure everybody's clear concept, and answer all your folks' questions. So, but before you go, make sure you smash that like button, share this with your friends, subscribe. There's a little bell at the bottom when we pop in unannounced here at Pro Trader Strategies. That way, if Mary Ellen jumps in here, that she will be able to get her content out to you guys. So that will all help here at Pro Trader Strategies. And comment, like I said, we'll circle back around and check you guys out. That's all I got. Do you have anything you want to close out with, Mary Ellen?
Well, you can catch me at stockcharts.com. I have 2 shows over there, Chartwise Women, that I do with another female co-host.
Oh,
and
nice.
Yeah, it's all about educating. We do focus on women, but it's not just for women. And then I have an MEM Edge Friday wrap-up show that I do each and every Friday. So that's at stockcharts.com.
You know, I did read an article. It was probably like 5 or 6 years ago now, and it had all of the whole thesis laid out as to why women were better traders than men. And one of those was the fact that guys, believe it or not, will get emotionally attached to their trades and want to try to let their ego get in the way, whereas women are like, this is a deadbeat stock, cut it loose, you know. And that's what more people should do, you know. Pull the ripcord. It's not working out, your gut or anything changes throughout this life of this trade. You put that trade on, and all of a sudden you're like, I don't know, something's telling me I don't like this trade. Get out of it, reassess, and don't let yourself go into that whole emotional back and forth as to, I'm not sure, right?
Mm-hmm. No, that's actually very good advice. Yes, don't let that ego, or don't fall in love with that stock or that trade. Right.
Yeah. Do not fall in love with it. That's a good. I agree. I totally agree. And I struggle with that because I'm sometimes like, you know, like with Penn, I rode Penn out a little bit too long, but my whole thing was I bought it at the low, the day it went down to 375 the last year during the pandemic. And I bought it. And in that parabolic move, I was doing covered calls and I lowered my cost basis to zero on it. And I was talking about it in my spot the trade that I do on the dailies. And so once I owned it for zero, it was like, and I let it start correcting. And, you know, usually I get out of those. It was in my IRA, so I didn't get out of it. But, and the fact that I lowered my cost basis to zero.
That's a class I want to learn about. Listen, I'm going to be on the lookout for that webinar.
Yes, definitely. It's just,
you know,
if you look at a chart from the low in Penn to basically going from $4 to $149, you know, and I was doing covered calls through that parabolic move. It was like, wow. You know, you can do that. It doesn't always have to be just a crummy stock like IBM that trades sideways, right? For the last 12 years. But it can be in a parabolic stock or that kind of move, and you can still have a successful strategy like that.
Fantastic.
All right. Well, I appreciate you joining us today, and I love the insight. You know, it's great to hear from other people, and something that you and I both know is we never stop learning, or never try to stop learning.
Could not agree more. Yes.
Yeah. You got to. Yeah. The older we get, the more and more we have to read, right?
Expand our horizons even further.
I agree. All
right.
Thank you very
much.
I appreciate your time.
You bet.
And we'll have to do it again soon. We're not going to just make this a one-off thing.
That sounds great. Look forward to it.
All right. Take care.
Take care.
Bye now.